John Meuret from Meuret Grain Company is our corn and soybean market analyst this week. The USDA's first corn condition ratings of the season show 72% of the crop listed in the categories of good to excellent. Nebraska matches that total. Nationwide, 94% of the country's corn has been planted, 2 points ahead of normal. Farmers in this state have nearly caught up to their usual pace. They're 96% finished, which is 1 point behind the 5-year average. We talked with John Wednesday afternoon in Brunswick and started by asking for an update on crop conditions and planting progress in his area of northeast Nebraska.
Jeff, we're pretty well done planting. There's a little replant stuff and maybe some finish up acres in eastern Nebraska where it's been wet, but I'm going to say everything 90 miles west and that direction is all done. Conditions look really pretty good, all things considered. So the early corn's looking okay, and the late corn's quickly catching up, it looks like. So
let's talk about the strength in the market. Wednesday was another good day. What is it coming from? Is it coming from funds? Is it coming from fundamentals? Is it coming from weather? Pick one.
I think all of the above, Jeff. I think it's fair to say that a little bit of it's money inflow, a little bit of it's weather. There's some concern still on La Nina this summer. Some of it's Brazil. Brazil's got some issues with their corn crop down there. Their corn price has doubled in the last 2 months, and so that's making people pay attention here in North America. And I don't know that we're going to run out of corn, but at least it's something that warrants a little watching. And then on beans, you go farther south, Argentina's got some harvesting issues or had some harvesting issues, and so they've maybe got some quality concerns on the soybean meal they're trying to get rid of. So
let me ask the question a different way for people that are thinking that this can
Sure.
still go up. How much of it is fundamentals versus the other things?
I'm going to say about 20% is fundamentals, and remember, it's a futures market, so it's always trying to trade 3, 4, 6, 8, 10 months away. And so yes, today we don't have an issue, but the market's fully aware that it can't wait till the last day and then rally. So we're going to price in some of this concern, and we're going to see how the weather unfolds this summer, Jeff.
Going down to Brazil, how much of a problem do you think that corn crop is?
It's a big problem. It's a big problem. You've got the farmer that's oversold, or he feels like he's oversold, so he's wanting to buy back some of the commitments he's made, and the crop damage isn't done in the northern parts of Brazil. So it's a large problem, and what it's doing is focusing some business back to the U.S. Not a lot, but a little bit, and if that problem continues for them, we'll be able to pick up quite a little business.
Is there any concern over the border with the soybean crop in Argentina?
Yeah, there's certainly some problems in the soybean crop. I don't know that it's a quantity loss. I think it's quality. And again, they're going to worry about their export commitments on meal and make sure, they are the world's biggest meal exporter. So it's going to be important that they get figured out what they have and how to make sure they can continue to sell meal.
Is it too small to have an impact bringing buyers back to the U.S. if there's anything left here?
No, not at all. I think there's certainly some room to bring it back to the U.S., but the buyers have been really patient, and they're patient because of the feed wheat in the world. So if we didn't have the feed wheat problem, I'd be telling you we're going to have a really nice summer exporting corn. But because there's feed wheat in the world, we get beat every day. Now, there's some buyers that aren't going to buy that. They're going to come to the U.S., but we're still going to struggle to really get rid of the surplus corn we have this summer.
I want to talk about the Federal Reserve and whether or not they raise interest rates. Tell me what the impact is when they raise interest rates, what that impact is on U.S. commodity exports.
Well, the thought is if they raise interest rates, we're going to have a higher dollar. And if we have the higher dollar, that should slow down U.S. business out of the country. However, I'm not sure they're going to raise interest rates. And I know the Fed has kind of said they're going to raise them 2 more times this year, 1 more time. And I'm not sure we're quite ready for that. So I'm actually neutral to bearish the dollar, which I think will continue to support the exports. And to be quite frank with you, I think the business is going to be here irregardless of what happens to the dollar this summer.
Really?
Mm-hmm.
Because?
A certain amount of it's going to come out of the coast no matter what. The dollar moves are more longer term, and so yes, it'll put us at a disadvantage on the feed wheat we spoke about, but I still think the corn business and the bean business has got to come back to the U.S. by the 1st of August.
Yeah, that's a valid point, or at least something to bring up. If the Fed would raise interest rates, when does it have an impact?
It's really long term, but it's a good question, Jeff. I mean, it's 9, 12 months away, and so it's really a long tail to have that impact you're talking about in the exports.
All right, going back to the domestic market here for corn and soybeans, at what level here do you think that farmers should put more sales on the books?
It's been hard, Jeff. I mean, I was wrong 3 months ago with everybody else on beans. Everybody thought they'd stay cheap, and they didn't. You get meal at $400 tonight. So the farmer feels like he's sold too much for the beans, and so he's got to maybe make some catch-up sales on the corn, but the beans he's pretty comfortable for a while. And to answer your question, when you get corn to 4 1/4 December futures, you probably need to re-engage. You're going to be above the cost of production in a lot of cases, and we're not out of the woods yet with a surplus corn.
Is there a 2017 price target that you think producers should at least look at or try to set targets for?
Well, it's going to make it really difficult because you're going to have this December be higher priced than the December 17, and the beans are already $1 some cheaper. So it's going to make it really hard for the farmer to engage out there. But I think he needs to focus on this year's crop, sell himself to his level he's comfortable, and then he can start to look at the 17 depending on his cost of production. You know, fertilizer has stayed cheap, Jeff. I think that'll help these guys, but we don't know what 17 is going to bring.
John, where's basis at in this area, and where do you expect it to move here as we go through the growing season?
It's still weak, Jeff. It's been weak and hasn't really moved since October last year. Corn feels like it can improve a little bit. You know, today I would say we're 10 to 15 cents below a long-term average. But you know, you got a farmer that was undersold and has flooded the market, an ethanol plant that's got all the corn he wants, and an export market that's just starting to pick up, Jeff. So I think we can pick some up on the corn. Beans are also weak today, in fact historically weak, but they're making a comeback. It's been quiet for the last 10 days. The farmer's been finishing planting, and so I think that'll come back a little bit as well.
This market rally, has it chased more corn into the elevator?
A little bit, but now I think the farmer needs to sit down and think about, okay, what do I have? I didn't think I'd get the rally, and so he wasn't ready for it. But I think in the next 2 weeks he'll be ready.
Supply and demand estimates out next week for the June crop report. Any expectations?
Yeah, I think the bean carryout's going to be smaller. It's a dart throw for the USDA, but I think they're going to try to take the carryout down this summer in the beans. Corn's going to still struggle to get much below 2 billion bushels. So we have plenty of corn, and beans I think are going to be the driver next week.
Later on in the month, June 30th, acreage report and grain stocks. First on acreage, specifically on acreage, I guess, do you have a thought if there will be more soybean acres than the market expects or than we had last time?
Well, it's a wide range of guesses, Jeff. It's a great question, but I think you're still going to see 2 to 2.5 million acres of beans move in, and corn will give up most of that. But some of the acres are going to come from the acreage pie in general. There's a little more acres around, I think, than they had accounted for at the end of March, and I think we'll see some of those come back into the market.
That's probably an important distinction, right? Because some analysts are saying more bean acres, but not necessarily at the expense of corn.
Correct, and that's got big implications, because if we say that the pie is bigger, the acreage pie is bigger, we're going to have plenty of acres of everything. And then if you start throwing on the double crop bean acres following wheat, I think you've got potentially a bearish outlook on beans after that.